So in this video, we're going to talk about what is the best strategy for investing in real estate. Now, this is a very subjective and very personal answer for each of you, because how you invest in real estate, there's 100 ways to skin this cat. There's not a right way. There's definitely a wrong way, but there's not a right way to invest in real estate and make money. There's lots of options. You can actively invest, you can passively invest, you can flip houses, you can rent houses, you can wholesale houses. I mean, we have lots of places that we can go on this. So let's talk about some strategies of making money in real estate. Hey, I'm Mark Ruiz, and I've been investing in real estate for a couple decades. Like, in fact, I mean, we go back to, I started my career watching late night TV. I was flipping channels. Back then, we had infomercials, and I remember very clearly, you had George Foreman selling grills, you had Tony Little selling exercise equipment, and then this guy Robert Allen pops on the screen and says, you can invest in real estate with no money down, which is fantastic. I didn't have any money and I wanted to invest in real estate. Well, really, I didn't have any money and I hated my job, so I wanted something better. So I started investing in real estate. And mind you, I'm 21 years old at this point. Like, I'm looking for my purpose in life. I'm trying to figure out where I want to go and what I want to be. So we start following this system and buying real estate, no money down. Now, I want a caveat here. To make money in real estate, you need money, but it doesn't have to be your money. So let's go back to real estate strategies to make money, or strategies to make money in real estate. Number one is creative real estate. Now, creative real estate, typically these are deals, these are unorthodox, I guess is the right word. These are unusual. I mean, you're doing creative financing, which means you're taking over payments, which is what we call subject to existing mortgage, a sub-2 deal. You're getting owner financing because somebody has a property for sale and they don't necessarily need cash today, but they need to solve a problem. Or creative real estate, we do lease options where we can take control of the property and rent the property and just pay a lease option fee to the owner. So you can do some creative stuff. Now, creative also translates to pain in the ass. It can be done and you can make good money. Personally, I'm a flipper by trade. Like, we like to flip houses. It's exciting. You go in, you buy something, and flipping houses is really simple, guys. You buy it cheap, you fix it up, and you sell it for more than you got in it. It's that simple. Now, it's not easy, because here's what you got to figure out is the subsets, or the skill sets that are going into it. Because to flip a house, well, you got to be able to find a house. But how do you find a house? You either got to deal with a wholesaler, or you got to figure out how to market direct to seller. And if you're really lucky, and I mean lucky, you can find a deal on the MLS. But typically, by the time that it gets to open market, it's been picked over, and any experienced investor has picked it off long before it went to the public view. So you got to figure out how to be able to find the houses, and then you got to buy the house. Buying the house is actually the easy part, because once you buy it, then you got to figure out what to do with it. You got to fix it. Now, this is where things get really interesting, because first of all, if you don't understand construction at least enough to know what it should cost you and how to how things should look when they're done, this can really make or break you. So you gotta get it fixed. Now, you gotta remember, you gotta fix it in comparison, or in you gotta fix it complementary to the neighborhood or the surrounding environments. What I mean by that, you don't want to go buy a $50,000 house and finish it out like a $500,000 house, because you're never going to get your money back. And you have to remember, you're not going to be living in this property. So don't spend, you don't want to remodel it as if it was your house, because you'll spend too much money and you'll do things that you won't ever get back. Anyhow. So you flip houses. Now, when we flip houses, we have a suggestion. What we found, our sweet spot, was the entry-level workforce, first-time home buyers, the range. That 150 to 250. You might be able to, depending on where you are. I mean, obviously you're not going to find a $150,000 house in California or Florida, maybe not even Texas anymore. But in Oklahoma, that's still pretty normal. But you find that entry level, whatever entry level is for your area, and the thing with first-time home buyers, they're generally grateful and happy to have a house. Now, we went through this phase where we thought bigger was better, and we did some larger flips at $300,000, $400,000, $500,000 range. And I caution against this. The reason I say that is because the more expensive it is, there are less people who have the ability to afford your house. But really what comes to it is when you're working in those higher value price points, these people are more sophisticated. They understand and know what they want, and they're going to be more detailed or specific on what they want to see, and they don't really care what you put in the property if it doesn't match what they want. So with the first-time home buyers, the entry level, oftentimes we can sell these things as quickly as we get them done because we're providing a nice quality place to live for people. So, and you look at what else is available in those price points, generally speaking, ours are nicer because we went through and did the work. And when I say do the work, I mean don't just put lipstick on a pig, guys. Don't just go in there and throw some carpet and paint, call it good. You really got to fix up these houses. You got to make sure that they're safe. You got to make sure that the mechanicals and things are going to last, because the last thing you want to do is get the reputation of being that guy. I mean, in the rental world we call it slumlord, but in the flipping world, just don't put lipstick on a pig. Like, actually fix it. Anyhow, so you're selling houses to first-time home buyers. These people are grateful, very happy to have these houses. Now, we also, the downside to flipping houses is you're generating active income. Active income triggers capital gains. Taxes can get crazy if you're not careful. Now, one of the reasons that we love real estate so much and how we make money in real estate is not only the money active income produced, but the tax shelter and the benefits of the write-offs that we get for owning real estate. So even if you're a flipper, even if you're a builder, or whatever it is that you choose to do, if you want to actively be involved in real estate, rental properties are a great tax shelter. So now we're making, on rentals, we're making a monthly cash flow. Now, when we got spoiled, the last several years, money has been cheap. Like, it's been almost free. Like, we got spoiled with cheap money. That is not normal. And if you look at the 40-year average, that 6, 7, 8 range is pretty average, pretty normal. So we are in normal market conditions as far as interest rates. But what it does is we got spoiled by cheap money, and we were able to afford a lot more than what we were able to in any other economic climate. Now, I say artificial because rates that low aren't sustainable. Now, if you were lucky enough to get a 30-year fixed, you're in good shape. But almost all commercial debt is on a 5 to 10 year adjust, and at some point, whenever the rates adjust and go back up to market, it's going to be really hard to cash flow these things. Not saying that don't buy rentals. I'm not saying you can't buy money or make money in rentals. I'm saying the way that we make money in rentals is different, because you can't look at just cash on cash return. I mean, you can, but it's not the same as it used to be. So rentals, you go from a point of wealth creation to wealth preservation. So in the transition, you need to start finding places to tax shelter, because if you're just making all kinds of money, Uncle Sam's going to knock on your door and they're going to want their piece. So we use the rentals as a tax shelter to offset the active income that we're making flipping real estate. Now, you can wholesale real estate. Wholesaling is a fairly simple concept. You buy it cheap and you sell it for more. Now, what they don't tell you, because everyone says that wholesaling is a great place to start, when you don't have any money. And I call bullshit, because wholesaling is the hardest damn job in the business. And the reason I say that is because if you break down what wholesaling is, so you have to market to distressed property owners who want to sell you their property. So you have to market and talk to people. And let's just get this out in the open. People who are in good shape, people who have a nice house, people who have no problems, don't need to sell you their house at a discount. So whoever you talk to is going to have a problem for you to solve, period. So if you're wholesaling, you've got to get good at talking to and marketing to people who are in a distressed situation, whatever it may be, if it's financial, if it's the property's in bad shape, if it's a divorce, if it's moving out of state, if it's somebody died, if it's probate, inheritance. I mean, there's lots of issues, lots of situations that people need to get out of. Now, the flip side of this coin is no, we're not taking advantage of people. We are helping people solve problems that they could not under other circumstances or otherwise solve themselves. So we are helping them through. Now, we are not the best buyer for everybody. Other people will pay you more money, but we will be the simplest and quickest solution that you could find, because if we are able to come to the terms, I say this, because we are professional and we are have the resources and the experience to be able to pull this off, but we have the simplest transaction. Now that I've gotten off track, let's go back to, you have to talk to people and convince them to sell you their property at a discount. Okay, now let's say not that that's hard enough, but now that you have their property in contract, you have to figure out, if you're going to wholesale it, you got to now market to a different set of people, to investors who are going to buy the property. So you have to talk to, negotiate with distressed sellers, convince them to sell you their property at a discount, enough of a discount that you can turn around and then market and talk to buyers. Now, your buyers are guys like me. We are investors. We are professional. We're experienced. We know what our numbers are. We know what it's going to cost us. We know what the property is worth. So, word of caution: if you don't understand your numbers, don't make up some shit and tell us, because we're going to see right through it. Like, if you send me a house and you say it's a $5,000 remodel, I'm just going to delete your email. Like, I'm not even going to read it. Let's be honest. But anyhow, so you have to find a buyer, a sophisticated investor who understands what they're doing and is there to beat you up to get the best deal possible for them. So you have to be multi-talented and be able to talk to different people, and these are different skill sets. So yes, you don't need a lot of money to wholesale a house, but how are you going to find houses to wholesale without marketing or spending money on marketing? I mean, there's some creative ways you can do it. You can go drive for dollars. I mean, everything that you do is going to require you to spend money, period. Like, so starting in real estate in the hardest position doesn't seem like a logical idea to me. Now, where we've evolved to, and in my personal opinion, based on today's market, today's climate, is turnkey investing. What is turnkey? Turnkey is working and leveraging other people's experiences, knowledge, and resources. Why is this important? Because to actively invest in real estate, you got to have time. You got to have effort, energy, money, all those things. But time, somebody's got to actively work the project. Somebody's got to go find the houses. Somebody's got to run the renovations, or in our case, somebody's got to buy the lot. Somebody's got to build the house. Somebody's got to rent it. Like, there's lots of active moving parts. There's a lot of moving pieces here. And if you try to do it on your own, it is very time consuming and cumbersome. So turnkey, where turnkey comes in, it allows you to focus on your main thing. It allows you to make money doing what you do, and also allows you to make money investing in real estate and utilizing us, other people, whoever it is. So you're making money now you're making multiple streams of income. So what turnkey real estate does is it allows you to invest in real estate, have the benefits of owning real estate, i.e. write-offs, tax benefits, also cash flow. So you have benefits of owning real estate, but you don't have the day-to-day interactions of having to be actively involved, which allows you to spend your time where you want to. If that's working on your business, if that's spending time at home, if that's traveling, whatever it is that makes you happy, but you are able to rest assured knowing that your investments are in the hands of professionals and people who have your best interest in mind, and you're making money regardless of your involvement. We've been in this business for a long time, and we've been in the turnkey space for several years. And in the beginning, we were remodeling houses and we were selling them turnkey, and we own the property management companies. We get to see the good, the bad, the ugly. We see it all from start to finish. And what we know is, one, with remodel properties, everything is new on the surface when we finish the remodel. What we don't know is what's behind the wall that we missed, what we didn't see, what could happen, what could pop up a couple of years from now. That's the old cast iron clay sewer line in the backyard. It's working today, but you know what? It collapses tomorrow. So even if you do a perfect remodel, in a few years, you still got an old house. And then after tenants move in and move out and move in and move out, you're going to have to go spend money to redo the house. So, we just had this happen the other day. We have a rental house. The roof is leaking. We had to replace the roof. That cost us, I think, $7,000. Well, there went the cash flow in that house for the entire year. Actually, probably about 18 months of cash flow gone in one day. So we like new construction. Why do we like new construction? It eliminates all the surprises. New construction is more predictable, it's more repeatable, and it's more scalable. So if you are buying a turnkey property or you want to do turnkey investment, it makes it so much easier to know. Well, let me say it this way. If you put the wall up, there's nothing behind the wall to surprise you. So new construction, everything is new. Everything is under warranty. So first thing, if something actually does happen, something major, you have some major issues, you have a warranty to fall back on. But more importantly, everything that is new is a lot less likely to have maintenance issues. And I'm not saying that you can completely eliminate maintenance as long as you have people living there, but you can really limit it to tenant maintenance. So that makes it more stable. And then what turnkey does, it allows you to have a cash flow, make cash flow. It allows you the tax write-offs so you can depreciate the property and you can offset active income. Turnkey income, also your tenants are paying down your principal, your balance, your mortgage balance. So you combine that with your appreciation and you're gaining equity on a daily basis. Now, where it gets interesting is, after a few years, and the reason that we like new construction is we have a longer runway. We own the property and creating the equity. But instead of, and you have a couple of choices here. You can maintain the property, you can fix some things, and you can pay it off. Great, free and clear. B, you get to that point in the cycle to where you're going to have to start doing some major repairs. You have to replace a roof, you have to do a new HVAC system, or the plumbing is shot, or whatever it may be. Well, what if you sold it? And when I say sell it, you gotta be careful, because selling a rental property or any real estate has tax implications. Good, bad, ugly. You gotta involve Uncle Sam in pretty much everything you do. But if you sell it and you use a 1031 exchange, which a 1031 exchange is a tax loophole, we can go more into details on that later, but what it allows you to do is sell the property, capture the appreciation, because if you sell a property outright, all the depreciation that you had written off over the years you recapture, which means the IRS adds it back into your income, so you're taxed on more of the transaction than what you actually made. That makes any sense? So 1031 is a loophole. 1031, you exit the property, you put it into that process, and you use that to buy another property, and you're able to avoid the capital gain taxes. You're able to avoid having to recapture that depreciation. So you maintain 100% of your equity during the transaction. Instead of losing a piece to taxes, you get to take all of that into the next property. So, and the reason we say that is, if you get 8 years down the road, you replace a roof, you lose a year or two of income. I mean, that just skews your return, your ROI, your rate of return. So in order to maintain that return rate, you 1031 into a new property, and you don't have those dips. Now you start that whole process over. Everything is new, everything is under warranty, and you have very little risk of things breaking. So in our world, having done all these different ways of making money in real estate, and I'm not saying that you can't make money flipping houses, you can, but with inventory, it's really hard to buy enough houses to make enough a sustainable living flipping houses. Buying existing rentals. I mean, with inventory low, people are paying too much money. With interest rates high, I mean, if you're not careful, you're not going to make any money. With new construction, like I said, it's predictable, it's repeatable, it's scalable. So you know how much the property is worth. You know how much it's going to cost. You know how much it's going to rent for. You know how much the taxes are, how much the insurance is. Now I'm not saying that you're not going to have any maintenance, but you're going to have a lot less. So it makes it so much easier to predict what you're going to make. And then you compare this to, let's say, the stock market. Yeah, you could make more money in a short amount of time in the stock market, but 3 days later it shifts and you lost it all. So real estate allows for a very seamless rate of return. I mean, seamless is not the right word. It's sustainable, predictable. More wealth has been generated in real estate than any other vehicle out there. So there's lots of ways of making money in real estate. Actively, you can wholesale, you can flip, you can actively landlord. Passively, you can either A, buy turnkey properties, or B, invest in a real estate syndicate. Now, syndication is a whole nother story. Basically, you're pooling money with other investors to buy larger assets. Now, this is great for the operator, and you better pray that operator knows what they're doing, because there's not a lot of recourse. If they mess up and lose their money, they lost your money. With the turnkey model, even if we mess up as property managers, or if you have an issue with the people on site, you own the asset. You can change staff. You can hire somebody else and still maintain your asset. If you invested in a syndication and they lose their asset, you lost your asset. So now I hope that this kind of gives you an idea of the array. I mean, there's lots of ways to skin the cat. There's not a right way, there's not a wrong way. Well, there is a wrong way, but there's not a right way. There's not a singular way. And I encourage you to do your research. I mean, I want to be very clear. I'm not a guru. I don't have all the answers. I'm just here to share the experiences that we have. We have learned some things in our decades of experience that we would love to share with you. I hope that this helps. And if you like this information and you want to follow along and join the conversation, join us in our Rugged Real Estate Facebook group. The link is below. We'd love to see you. We'd love to talk to you. Look forward to seeing you soon.